Live on Facebook. Hello, everybody. Eric Owings here, Owings Tax and Accounting, and it is Weekly Tax Talk number 5. Let's see, we are directing the, okay. This thing always confuses me. What I want to do is make sure that I'm looking at the comments section here. That's on another screen for me, hence the looking upward thing. So once I'm confident I got that going on. Okay. So what is going on here? Guys, I appreciate your patience. It does take about a minute to set this up. So let me just chatter about something and kill the dead air. So why I am getting this open. First thing, I live in what the signs, if you drive into Colorado, say at the state border, it says, "Welcome to colorful Colorado." And it's very nice here most of the year, even when it's cold. You know, the sky's very pretty and so is the scenery and everything. It is crappy out today. It's like seasonal affective disorder day. I don't think it's going to get any warmer, and about 38 degrees, and it's just gray and gloomy. And, you know, it's a good day to stay in and watch Netflix reruns if you don't have anything to do. So I am still trying to get into this. So let's see. Oh, I know what the problem is. We're trying something new and I'm not in the right place. Let's see. So I got to go to my own thing. Bear with me here, would you? Okay, here is the event. I don't know if I'm going to be able to see the questions, so I don't know what I'm doing. Okay, I should have, well, okay. Let's just go ahead and talk about things, and I'll keep fumbling with this and looking up screen from you. So first thing is that today is April 17th, and the new tax deadline for this year. 2 years in a row, we've actually had a deadline other than April 15th, July 15th last year, when COVID was a much greater unknown. Now, hopefully, we're kind of getting things a little bit more under control. There's still new cases out there, and I'd still urge, you know, my friends and listeners and clients and followers, as the case may be, to, you know, exercise normal caution. Remember, if you're wearing a mask, you're doing it for other people as well as yourself. So I know there's a lot of frustration and, you know, anti-precaution sentiment. I just want to get back to normal. And we're actually going to get to talking about that a little bit, because the main topic of today is the restaurant deduction. That has traditionally been 50% for many years. It used to be meals and entertainment, or stress on the wrong thing there, meals and entertainment, which means you could take somebody to the Bronco game or the Bills game if you live up there, or Vikings, whatever. And as long as there was a business purpose to it, you discuss business for at least a substantial period of time. Okay, I'm sorry, I'm getting a message from somebody I've asked to help. Let me see, I'm in my event. Try there, question mark. I told her that earlier, okay. Yeah, you used to be able to write that off, but that went away with the TCJA, which is what I call Tax Cuts Jobs Act. That's what we all call it, people that have to deal with it. Since 2018, there's been major changes, and one of them is entertainment went away. Can't write that off anymore. Another big one that really bothers me, well, two actually, is moving expenses. You can only write off moving expenses now if you're active duty military. And the other one's the teacher education credit. They decided to strip that lousy $300 off the front of the 1040 in 2018. It made a comeback due to teachers spending their own money on things like hand sanitizer and sanitizing wipes and stuff like that. So that's back. But it's been my experience that teachers generally don't keep those kinds of receipts. They're not thinking about anything tax related as much as they are about the welfare and, you know, development of their students. And as a tax franchise supervisor many years ago, I had several teachers that came in. I don't think any of them ever took the educator credit because they didn't have any confidence they could find the receipts. And it was only $300 anyway. So when they took that away in 2018, it bothered me. This is a tangent I go off on very often. So thank you for allowing me to vent. Okay. Now I am still struggling to see if I can find comments, and I'm wondering, live on Facebook. Let me see something then. Okay. Let me hang on a second here because I've got a lot of troubleshooting going on. It says I am live streaming. So this may be nothing but a recording at the rate I'm going here. I wonder if I have to go in here and hit this. Let's see something. Live video, live producer. Happening now, weekly tax talk. Allow access to my camera. Retry. Well, it can't find me because I'm already on my thing, on my Zoom meeting. So again, this might end up being a recording only. So let me see. I've got people trying to tell me things here. This is just not working out very well, but I can still talk about the topic. So one of these days, I'm going to get this figured out. Let's see. Oh, actually, says she is. Okay. Thanks, guys. This is kind of fun. Matter of fact, let me bring this down. I'm not going to do that. I'm not going to do that. Okay. So let's talk about restaurants. Now, I was just talking about, anti-precaution sentiment, and people are just getting sick and frustrated and tired of the government telling them that they can't do things and that businesses are shutting down and people are hurting. And stimulus is great, and we've got all this money, which is a topic for another week. Where does it come from exactly? I'd like to talk about central banks and how governments basically create wealth out of thin air, but not today. What I want to talk about today is the restaurant deduction. We were going over meals and entertainment, and that went down to meals only, and that has remained, as it has been for as long as I can remember, a 50% deduction. And I think there's a little bit of IRS logic in that, even though it's kind of frustrating. For one thing, it messes people up that are new to tax software. You don't know whether or not to divide by 2 and enter it first. Generally, you don't, by the way. But the other thing is that the fact that it's 50%, why did they do that? Well, there's a lot of room for abuse in that. I deal with a large cross section of people and actually reach out to people in the real estate industry and other service industries, consulting, loan origination, that kind of thing. And they have client interaction and they take people out for meals. Especially, you have your real estate buyer agents, and they're looking at a day of trying to find about 5 or 6 different places to look at, and quite often they'll take them out and buy them lunch or something like that. Now that is a legitimate write-off, and you can write that off at 50% for 2020 and in years past. With the Consolidated Appropriations Act, that's the one that created the round 2 stimulus that most people with direct deposit got that the first week of January. I think ours hit on the 5th. And with that act and that round of stimulus, they also passed a 100% deduction. It's only in place for 2 years. So it's for costs after 12/31/2020 and before January 1st, 2023. So that's a long-winded IRS way of saying your restaurant expenses that are legitimate business expenses for 2021 and 2022 are 100% deductible. And the ostensible reason for this is kind of common sense. Restaurants have been hurting because of all the crap they've been going through. So trying to get them back into a state of some kind of prosperity and economic viability is the main reason behind this, to the best of my knowledge. And it makes sense, even if there are other more underlying reasons, but that makes good sense to me. So there are some things, if you're not familiar with what you have to do to qualify for a restaurant. Basically, I have a number of clients, and the deal is with me, so I sit people down, and if I'm doing both their books and their taxes, and I'd say about half of my clients are, I refer to this as CFO services, where basically your one-stop accounting shop. The deal for these folks is this: if you've got a credit card and a restaurant appears on your charge in your cloud-based accounting system, I'm going to assume that you took out the correct card and used that for a business purpose meal. So that's the deal I have with them. Now, the definition of that is that you have to purchase it from a restaurant. The owner of the restaurant or an employee has to be there. That's kind of a no duh thing. It's like, how are you going to buy something from a restaurant that's not open, right? So, but there's the language behind that. So these can be either for meals that are eaten on the premises or taken to be eaten immediately afterward. And they have to be in the business of preparing a meal and providing it for immediate or shortly thereafter consumption. Meal has to be where, if it can be, if it is with a client, I should say, business should be discussed. Also, employee meals at a conference above and beyond the ticket price of the conference. You know, a lot of people go to these seminars and might take a lunch break in the middle. If they didn't get the meal included, then they can write that off. And in this year, 2021 and 22, that will be 100% now. Your employee meals while traveling. So if you're on business travel, then meals, same thing. Treating a few employees to a meal. Now, here's an interesting distinction. If you are feeding staff and it's in your workplace premises and at least half of them are in attendance, that has always been a 100% write-off. Staffing of food staffing is kind of one of the nomenclatures that I use for that, or staffing meals, that kind of thing. So if you are like catering something, and I've worked for The Man in the past, and they decide out of the goodness of their heart to buy like a great big stack of Domino's pizzas and treat everybody because it was a holiday was coming up that weekend or something like that. Those are 100% write-off. You can do that. Same thing, food for a board meeting. Dinner provided for employees working late. So those are basically all legitimate expenses, and I am going to urge my fellow accountants / tax pros, if you're doing books for somebody, I would not change the way that you categorize these meals. In other words, continue to call it what it is. And if you have staffing meals as opposed to restaurant meals, even though it's all going to be 100%, I wouldn't group it all together and change your accounting systems for the simple reason of the going concern principle, which is a generally accepted accounting principle. You're basically doing books for somebody under the premise that they are going to continue to do business into the foreseeable future. And because of that, you don't want to change your accounting for these things per se. So restaurant meals and staffing meals should continue to have separate categories in your chart of accounts. And that's my opinion. So now let me see, my dinger's been going off. I want to see if anybody is able to actually see any comments here. So hang on with me. Facebook. Messages. Let's do this first. I'm going to check this real quick. So I'm already on your profile event using it. Oh, she's doing a funny thing. Use your own profile. Okay. So the other thing is, I wish I could find this event's comment string, and it looks like I'm just going to have to answer them after the recording ends. So with that, I think I'm going to keep this short. It's a shame if this was a true Zoom meeting, you could use the chat feature. So I'm ironing out the kinks on this. And one of the things that is making this kind of fun to do is that, to the best of my knowledge, other than a couple of close associates who I've had asked to watch, um, I don't know if people are seeing this during the live stream. So please do intend to come and join us next week. I'm calling it high noon Rocky Mountain High Time, and that is here in the Mountain Daylight Zone. So if you're in New York, that's going to be 2 p.m. and LA, San Francisco, that's 11 a.m. every single Saturday. If it's a bad day and time for it, I apologize, but the plain fact of the matter is I've got to pick a good time for everybody, including me and my clients, and well, not so much me, but my business and clients. And this middle of the day Saturday is just really the best day and time for that. If you have suggestions and I have enough input from people, I'll consider. But first of all, you got to show up or at least comment on the recording. So until next time, we'll pick a good topic for next week. I'll get the event out sooner, somewhere in the early to middle part of the week. And let's create some viewership of this, because once I do have the comment string open, you should be able to ask questions while I'm chattering away. I know I can do that if I do a Facebook Live on my phone. Guys, help me figure it out, okay? So until next time, happy Saturday, have a great day, and we will see you next week. Bye for now. And okay, bye-bye.